All right, guys, we are on Wall Street Silver today, and the young whippersnappers are doing their thing. And yeah, you could say I'm relatively young, but not as young as 17 here. I mean, look at this person. Only 17, but gotta do my part. These guys are stacking silver from a wide collection or a wide selection of geographies here, which is really cool. So shout out to Shoddy Comedian there. And if we go up a little bit, we'll see another young person. Just gonna scroll up. There we go. And here we have someone saying, most students spend their loans on dumb stuff like food or rent. This gal is stacking instead. Now, I won't comment on that, but I will say it's really cool to see young people stacking silver. And again, it looks like we have maybe a wide selection here of silver. Now, the reason why I want to direct this video to younger people and maybe even some people who need a healthy reminder is that, again, I'm on this channel. I want to educate people about some of the moves and some of the long-term and even some medium-term plays that silver allows for. So yes, on Wall Street Silver, there is a move to, strike at the COMEX and so on and so forth. But if you're looking at holding for other catalysts, I want to draw your attention to the what's known as the 10-2 yield curve. And the reason why I'm bringing this up is because once this yield curve steepens, by steepen, I mean just dramatically rises from the depths. Once it steepens to its peak, two of the last three major, I guess you could say steepenings, and this is, usually around recessionary periods, two of the last three anticipated inflation. And with the anticipation of inflation comes the rising of silver prices and even gold as well. So let's go back, or let's take a look here from the early 2000s to, again, almost mid 2000s here, we had a rise. And then from the late 2000s to the early 2010s, we had a rise here. Now, if we go back and we take a look at the early 2000s, you may say, well, what's going on here? I mean, it's down in the, $4 range. It's not really, it's not really doing that much, $4.12. But then by the early 2000s, it gets up to $7.16. Guys, that's almost a 80% move there. So that's a pretty significant move from low $4 to low $7. And if we take a look at what's going on here in the late 2000s, we definitely had anticipation of inflation there because of the QE programs, and it just really shot through the moon. And right now we're starting to see a steepening here. So, especially right after the election, when we really had some defined direction as far as where the economy would likely go, we instead of having all of this like choppiness here, there's a straight line from November to now. And we're currently about a little bit over halfway the peaks that we usually hit when it comes to the 10-2 yield curve. We usually get to the high 2.8s, maybe 2.9, but we definitely haven't gotten to a closing price of 3. So, pretty much we're at a significant level here as far as, being a little bit halfway or at halfway of where we need to get to. And currently we have silver prices at $25. So why I'm bringing this up is because usually, and yes, you've been hearing the Fed talk recently, they're anticipating the CPI rising, And again, I'm not a big fan of the CPI, but it's just one of the metrics that the Fed is looking at, and that's important because when the Fed is looking at that, they're trying to figure out when they can start raising rates and time that. Now, that's important because once they start raising rates, that will be a huge headwind for silver prices going higher. So for those of you guys who have more of a medium term outlook, well, let's just say, a couple of years, one of the things you have to realize is that the Fed is going to start considering raising rates. Now, here's another point that I want to bring up that I haven't really brought up before. It usually takes about, it looks like 3 to 4 years before we hit that peak. So take a look here. End of 2006, and we hit a peak here around February 2010. Let's go down here. April 2000, hit a peak around August 2003. Let's go down here to even to the 90s. March 1989 to September 1992. So roughly like 3 to 4 years, we go from bottom to peak in the last 3. So if that holds true or holds water, we hit our bottom around August 2019. Maybe we'll start to see a peak by the end of next year, maybe going into early 2023. Again, who really knows? But that's just one way to kind of say, let's ballpark this and see when we can start preparing to say, all right, maybe I can take some risk off the table here. So guys, let me know what you think about that timing. Let me know what you think about the 10-2 in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.